Welcome back to Alpha Recap, your quick, sharp wrap on the day's market headlines from stockalpha.ai. We're diving into rates, AI, and that high-profile IPO chatter. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Today was one of those days where macro and company news were pulling markets in different directions. Markets closed mixed, and there was a real two-track narrative all day.
Right, so, quick roadmap. We'll hit the macro move that knocked down non-yielding assets, walk through the AI and semiconductor story around Oracle, unpack SpaceX's Starlink revenue and IPO implications, and then run through the corporate dispersion we saw in earnings. Sound good?
Perfect. Let's start with the macro, because it was the dominant cross-asset driver today.
Traders pushed up expectations for more Fed action, which translated into higher short-term rate odds. That raised the opportunity cost of holding things that don't pay interest, namely gold, silver, and Bitcoin, and they all slid on the day.
Yeah, and to put that into plain English, when short-term rates were penciled in a bit higher, assets that don't give you cash flow look less attractive. Analysts note that higher expected terminal rates lift discount rates, so future payouts are worth less in present terms.
I mean, when you step back and look at this, it's mechanical. Higher real yields make gold and crypto less compelling as stores of value. That hit risk appetite broadly.
Exactly, and the dollar strength channel tightened things further. Tighter financial conditions across the board.
Okay, pivoting to AI and enterprise IT. Oracle's fourth quarter report was looming as a potential inflection point for the AI trade.
Right, and this is why people were paying attention. Oracle's commentary on cloud consumption, generative AI bookings, and deferred hardware spend would be treated as a proxy for enterprise AI budgets overall.
So the logic that people are running with is straightforward. If enterprises accelerate AI deployments, that lifts demand for GPUs and other infrastructure, which is bullish for semiconductors. If they pull back, semiconductor names stay fragile.
And the market kind of already showed that fragility this week with chip stock volatility. Some strategists remain optimistic about a multi-year AI tailwind, but others are cautious because near-term hardware demand has looked uneven.
Short reactions.
Big move.
Not great. Now, the SpaceX story. Starlink keeps stealing headlines, and for good reason.
Yeah, Starlink was reported to have scaled to a pretty big revenue run rate.
It's about $11 billion in revenue. But Elon Musk, said the timing of profitability couldn't be predicted. That's the tension right there.
Honestly, I was a bit surprised by this one. Strong top-line traction, but no clear margin trajectory, is a classic public markets headache. Analysts call this a real options problem. You're paying for growth optionality without a precise cash flow map.
Yeah, that tracks. The IPO debate will be about whether investors price that optionality generously or demand clearer unit economics, churn rates, lifetime value, and a CapEx roadmap first.
And to add to that, large CapEx needs mean dilution risk or deferred profitability. So growth alone doesn't eliminate valuation or execution risk, something we saw repeatedly in 2026 headlines.
Let's walk through corporate dispersion. Today was mixed. Connection outpaced peers after a strong first quarter, while Kimball Electronics posted a softer quarter and has pulled back over the last 6 months.
Connection finished the day around $73 after roughly a 20% one-day jump, and it outpaced the S&P by about 13% over 6 months. Contrast that with Kimball at about $25, down roughly 18% over 6 months.
Other names like Eastern Bank and American Financial Group traded with low momentum, and Hertz remained stuck near lower price levels. Smaller names had idiosyncratic stories. BioKey got a Nasdaq notice of non-compliance after delaying a Form 10Q, and OneMedNet reported more than $3 million in bookings year-to-date, exceeding all of last year.
Right, so analysts were debating whether this was simple idiosyncratic dispersion or early signs of sector rotation. Governance actions like the BioKey notice can rapidly change liquidity and risk profiles for small caps.
Short reactions.
Yikes.
Wow.
Right. And the other thing is,
Let's step back and connect the dots. 3 high-level themes tied today's headlines together. First, macro policy was the dominant cross-asset driver. Rising Fed rate expectations repriced everything.
second, earnings and forward guidance were retesting thematic trades. Oracle's fourth quarter was treated as an enterprise AI barometer with outsized implications for semiconductors.
And third, top-line scale does not eliminate valuation or execution risk. Starlink's revenue shows scale demand, but profitability timelines and CapEx needs complicate IPO pricing.
Exactly. Analysts noted disagreements across a few active debates: AI optimism versus semiconductor caution, growth versus profitability in IPO pricing, and governance risk versus growth signals in smaller names.
Okay, break this down by investor type quickly. Long-term growth investors saw today's crosswinds as a reminder to separate structural theses like multi-year AI adoption from near-term rate cycles. Analysts suggested retesting cash flow timelines under higher rate scenarios.
Value and income investors benefited from rising rate expectations because shorter duration, cash-generating businesses looked relatively more attractive. Event traders were watching Oracle, the SpaceX prospectus, and Fed commentary for elevated volatility.
Retail and speculative traders, meanwhile, saw precious metals and crypto decline, which reflected macro sensitivity. And small caps with active news flow, OneMedNet, BioKey, were primed for outsized reactions.
Institutional allocators took note of the dispersion. It was an argument for active selection and dynamic risk budgeting. Analysts recommended stress testing portfolios under alternative rate and earnings paths.
So what really stands out here is that the market is balancing 2 big narratives: macro tightening and selective company strength. And that's creating a lot of day-to-day noise.
The watch list that came out of today is pretty clear. 1. Oracle's fourth quarter calls and management commentary on enterprise AI and cloud consumption. 2. The SpaceX prospectus for Starlink unit economics and CapEx cadence.
3. Monitoring Fed communications and short-term rate markets, because trending higher terminal rate expectations will keep pressure on long-duration assets and non-yielding stores of value. 4. Governance signals for small caps. That BioKey notice was a timely reminder.
And 5. Follow through on earnings dispersion. Watch the names that move today to see whether those moves are transient or the start of a sector rotation.
Final read. The tape mixed macro repricing with company-specific catalysts. Rising rate bets tightened the leash on non-yielding assets, while earnings and private market signals, Connections outperformance, and Starlink scale created countervailing forces.
Analysts emphasize that the balance between top-line growth and predictable profitability will be the primary axis of debate in the coming weeks. So maintain clarity on your time horizon and scenario test under different rate paths.
Quick takeaways before we sign off. First, Fed expectations mattered most today. Second, Oracle's report will be treated as an AI demand litmus test. Third, Starlink's revenue scale impressed, but profitability uncertainty will dominate IPO pricing conversations. And fourth, corporate dispersion argues for selective, active approaches.
And a reminder, this is informational only. Analysts note market dynamics and data. This is not personalized investment advice or a recommendation to buy, sell, or hold any security. Do your own due diligence and consult a licensed advisor if you need tailored guidance.
Thanks for listening. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. See you next time.